Okay, hello, welcome. This is Rob Pear and Gareth John. We're here for our 2021 mid-year Upper Manhattan Market Report. We are going to be going over the data for the last 6 months and compare it to all the way back to what,
2018.
All the way back to 2018. Mm-hmm. So today you're going to see the effects of COVID, the effects of the return, and compare it to some normal markets of 18 and 19. Okay, to get started, we're gonna go over three things. It will be as brief as possible, but there's a lot of information here. We're gonna start with the Townhouse Market analysis from 2018 to 21, so you can actually see the ebbs and flows. We're gonna go into the condominium market, and then we're gonna talk to you about the current market status and the future trajectory as far as we see it, our opinions. Okay, so I'm Rob Pear, the founding broker of Harlem Lofts. We've been around 21 years. Here on Lenox Avenue on 124th, and this is...
And I am Dr. Gareth John. I'm the research analyst here at the firm.
All right. Okay, so let's start. Number 1 out of 3, Townhouse Market Analysis. Okay, what we do on both townhouses and condominiums is we specialize just on Harlem. We are not your river-to-river realty. We don't do everything for everyone. We sell Harlem and Upper Manhattan condominiums and townhouses, some co-ops. So in order to be the authority in this field, we decided to focus on exact areas and exact zip codes because they have a finite a line drawn rather than neighborhoods which are ambiguous. So we go down to 96th Street on the east, we go to 108th Street on the west, and we go all the way up to Inwood. We stop at Central Park. I said this before, unless we're going dancing or out to dinner, we'll go downtown. Otherwise, we are here in Upper Manhattan. Okay, so townhouses. Not all townhouses are the same. They look alike, but they're not the same. So you have 3 different types. You have 1 and 2 family homes. They are priced usually by square foot and by emotion. So you can't treat those, you can't price them the same way as you would a 4-family home, because they're, again, bought with emotion and price per square foot. When you get into the 3 and 4 and 5 family homes, it's considered an investment property. Those properties are typically looked at by investors, and they're pricing that property by the rental income, the NOI, the rate of return, the cap rate, capitalization rates. It's a different market. Much easier to price, by the way, because the emotion's taken out of it. And then you have in Harlem, or Hell's Kitchen and a couple of other areas, mostly Harlem and Upper Manhattan, you have the single room occupancy, which is treated totally different than anything else because you can keep a single room occupancy and rent it as one, or you can get your proper paperwork, your certificate of no harassment, and turn it into whatever you want, which is a whole nother video, which we could get into one day.
Right. Okay, so let's get into the townhouse sales data from the last 6 months, and we'll compare to all the way back to 2018. Okay, so compared to Q1 and Q2 2020 in the same part of the year, 2021, this year, we have seen 35 transactions this year versus 34 last year. Looks very similar. It's actually very different, but we'll get into that in just a second. $77.7 million worth of trade this year, 76.8 last year. However, if we break it down by quarter, we get into the more kind of granular data. Q1 2020, there were 24 sales. That was very similar to the previous year, which was a much more normal kind of year. So Q1 2020, pre-COVID, we saw 24 sales, very similar to the 25 sales that we saw in Q1 2019. Once COVID hit, the market went on pause. It went on pause in terms of the number of sales and the sales volume, not in terms of price. We'll get into that in just a second. So the market, in terms of number of sales and sales volume, was about 40% down in Q2 to 4 2020 versus Q2 to 4 2019. 2021, the market's beginning to recover. Q1 2021, this year, we saw 20 sales, Q2, 15 sales. So the market's coming back. It's not all the way back. But let's get into this in a bit more detail. Okay, so here we have the number of sales by quarter going all the way back to Q1 2019. Quarter one 2020, as mentioned, we saw 24 sales, $55 million. That's the final quarter pre-COVID. Very similar to quarter one 2019. Okay, you can see that here and here. So if we then look at quarters 2 to 4, 2020, 38 sales, $78.1 million. That's about 40% lower than the same period in 2019, where there were 63 sales, $135.4 million. Here compared to here. Okay, quarter one 2021, 20 sales, $44.7 million is 16.7% down on quarter one 2020. So we're back to about 85% of where we should be, or where we have been in the most normal kind of previous sales period. So we're back to 85% versus 60%, which is where we were in quarters 2 to 4, 2020. You can see that here compared to here. And then quarter 2, 2021, 15 sales, 33 million. That's about 40% higher than quarter 2, 2020, which is the first time we saw the market affected once COVID hit. So what this tells us is essentially the townhouse market is coming back. It's not all the way back, but the trajectory is up. Okay.
Can I ask you a question on that?
Absolutely.
When you say the market is coming back or on the way back, is it? We'll get into it, but the price per square foot and the sales price.
That's right here.
Okay, gotcha.
Yeah.
All right.
And in part 3 of this video, Rob, we'll be looking at listings going into contract, and these are also markers of our recovery, and they're actually really interesting.
Okay, good.
Stay tuned, folks. Okay, so speaking of price and price per square foot, quarter 1 to 2018 to 2021, we're going back 4 years here. You can see this graph's great, right? Because it looks as the prices have not really changed. We had, COVID right here. The sales numbers and sales volume dropped by 40%. Price did not move.
Hold on. Garrett spent a lot of time on this graph, but I have to tell you, I looked at it and was like, I could have done that in a minute. It's just a big box. So if you look at the 2018, 2019, 2020, 2021, the average price of a fair market value townhouse sale, 2.32 million, 2.31, 2.26, 2.22, 1, 2, 3, 4, all about the same. I want to jump in. So we've been doing this since March of last year when COVID started, and all jokes aside, we kept saying and we kept thinking that the prices were going to go down, and this is just proof that they never went down. The price per square foot, the price for the property stayed the same all the way throughout all of this.
Right.
Just the number of transactions were fewer.
Right. So this tells us that the underlying market is healthy and it's now recovering. Okay, and as mentioned, we're going to go into the inventory and the in-contract data in part 3. Okay, so let's look at transactions by property class. How is that changed? So we're going to be 2019, 2020, 2021. We've got the 1 and 2 families here, 3 and 4, and SROs. So COVID hit in 2019. In 2019, there were 19 residential sales, fair market value residential sales. That's 1 and 2 family. That dropped to 9 in 2020. That's quarter 1 and quarter 2. And then this year it's back up to 18. So this tells us that you can see here 1, 2, 3. That tells us that the residential market was hit hard by the other COVID situation.
I have to say, if you want to jump in, if you want to go back to all of our videos, we were doing these weekly during COVID. We kept saying the same thing, and it's true. We kept saying the investors will come back first. They'll buy the 3 and 4 family homes, and they did. And then later, once everyone feels more comfortable, the residents will come back, the homeowners, the families. That is exactly what Gareth is showing us here. That's what's happening right now.
And we can see, to confirm, the 3 and 4 family rental investment properties, There were 16 sales in quarter 1 and 2, 2019, 16 in 2020. So they held their appeal during COVID. They've dropped a little bit in 2021. They're at 10. You can see 1, 2, 3. So the rental investment sector was stable during COVID. The residential market was impacted and now is returning.
And we did mention throughout through the COVID period that another reason that the investment properties were popular is because of 2019 rule changes in July.
That's right.
That it kind of inflated the investment properties for the smaller buildings. So that investment money moved over even during COVID. It kept it solid. Now it's dwindling down and the homeowners and families are coming back.
Right. Okay, and then finally, let's look at transactions by zip code. Quarter 1, 2, 2019, 2020, 2021. And we're going from south to north here. So south is on the left of the graph, 2019, 2020, 2021. South to north. And as you can see, let's say 2019, townhouse sales in Upper Manhattan are usually concentrated in the central part of the area. So you've got central Harlem, you've got Strivers Row, those areas. And you can see that here. So 10027, 30, 31, those are the big selling areas. Okay, in quarter one and quarter 2 2020, there was a trend for the market to move south down to 10029, which is East Harlem, adjacent to kind of 96th Street. And Rob, you kind of mentioned your
beach properties.
The beach property, right?
So a couple of videos ago, I mentioned the beach property. So I've been up here for over 20 years now, just in Harlem. If you came back here 20 years ago, everybody who walked in this office at Lenox and 125th would ask the same question. We need properties below 125th and west of 5th Avenue. That's what they said. So I equated that to beachfront property. That is the best inventory. So if a market goes down and you have a beachfront property, if you have a property at the ocean and the market tanks, you want to have a property on the beach because you can always sell it on the ocean. So it's just a correlation. Now that this market is returning, when it was in trouble, it went back down to 10026, which faces Central Park and stops right before 125th Street. Those people were looking for deals for the oceanfront property. Those buyers came in and bought those properties. Now it's going back to Central Harlem.
And that's exactly what's happened. So the trend has reversed in quarter 1 to 2021. The popularity of 10029, 10026 has dropped. Okay, so to summarize part one, the Upper Manhattan townhouse market was stable in 2018 through quarter 1 2020, pre-COVID. The market was then impacted by COVID-19 in quarter 2 to 4 2020. It's now recovering. It's not fully back in terms of number of sales and sales volume. However, the prices have remained stable throughout, which indicates underlying health. Rental investment properties retained their appeal in 2020 due largely to new rental laws passed in June 2019. The residential 1 and 2 family properties were hit pretty hard by COVID, but they're now recovering. Okay, so this, as you can probably tell, we pay close attention to the market. We analyze the market carefully, and that helps us to optimize client objectives.
All right, so we're going to talk about condos next, but you guys, this is a lot of data, and Gareth has mined all this data. Stay tuned to the end of this video, because at the end of the video, we're going to tell you what all this data means going forward.
Right.
Because this paints a picture that looks very normal, but there's an underlying current that's going on, and you don't get the answers to that unless you wake up every day, put on these shoes, let me show my shoes, put on these shoes, this outfit, and go and live selling these homes.
Right.
So stay tuned to the end, and we're going to tell you what we think is really happening with the market and going forward.
Exactly. This tells you where the market's been. Part 3 will tell you where the market is and where we think it is going to go. All
right, the condominium market. The condominium market in Harlem. I moved here in 1998. I had to look up in a dictionary what a co-op was because Manhattan was full of co-ops. Harlem was just starting to be developed. Everything in Harlem is condominiums. So Harlem has the most condominiums of any area in Manhattan. So the condominium market is important. In my monthly updates, we've been telling you that it's been back since December, and now Garrett's going to give you some real facts and data to show you exactly what I've been telling you briefly on the monthly updates.
Okay, compared to Q1 2020 and Q1 2021, we saw 160 transactions Q1 this year versus 105 last year. That's a 52.4% increase. $143.3 million spent versus 87.4 same time last year. That's a 64% increase. Okay, so let's break it down just as we did with the townhouse data. Q1 2020, there were 71 fair market value sales. That was very similar to Q1 2019. However, Q2 to 3 2020, the 75 sales then, that was 51.6% below 2019 when there were 155 sales. So the condo market dropped by half in Q2 to 3 2020 compared to the same time the previous year. There was recovery in Q4 2020, at 66 sales, very similar to Q4 2019, 69 sales. So the condo market is compared to townhouse market, it's higher numbers of sales and lower price per sale. So it's a more responsive market.
And less risk.
Right, less risk. So it was hit harder by the COVID situation and recovered faster, just as you would expect. Okay, Q1 and 2, 2021, 160 sales, very similar to Q1 to 2019, 153 sales, slightly kind of over, in fact. And as you'll see in part 3 of this video, there are signs that the condo market is on its way up even further. We'll get to that later, but you need to stay tuned.
Yeah.
Okay, so by quarter, so getting into the granular data. Q1 2020, as mentioned, 71 sales, $61 million, similar to Q1 2019, 69 sales, $62.7 million. You can see here compared to here. Okay, Q2, 3, 2020, 75 sales, down by half compared to Q2, 3, 2019, 155 sales. You can see that here versus here. And then in Q4, 2020, 66 sales, very similar to Q4 2019, 69 sales, here versus here. And now moving into 2021, Q1, 2, 160 sales this year, similar to Q1, 2, 2019, 153 sales. 1, 2. So the market is indeed back. Okay, let's look at price. So did COVID impact price of condos? Was it like the townhouse market, which was completely stable, or was price also hit? Just like the townhouse market, price in the kind of condo market was not impacted at all. You can see stability over time. 2018 through 2021, quarters 1 and 2, $857,000, $924, $832, and $895. Prices remained very, very stable throughout. This, again, shows us that the market's healthy. The COVID situation impacted number of sales for a distinct 6-month period, and then, but the underlying prices did not change. Okay, and then zip code, we're going to analyze just as with the townhouse market, south to north, 2019, 2020, 2021, south to north, 19, 20, 21. Unlike the townhouse market, the condo sales are usually concentrated in the southern zip codes of Upper Manhattan. So 10029, 10026, 10027. You can see that here. So interestingly, in 2019, sales in 10029, southeast Harlem, from East 96th Street to 125th Street, that was boosted by 2 very large condo sellouts. You can see that here. But by Q1 Q1 to 2021, these condo sellouts had sold out. Just over here, you can see here. Okay, so I'm going to hand off to Rob to summarize.
Okay, so in the summary, what Gareth just said is it was stable in 18, 19, and first quarter of 2020, but then it was a large drop. Now, the condo market's a little harder to analyze when you're looking at the zip codes or the areas where the condos are located because it's where they were developed. This is a 3-4 year project. So a lot of the condo projects that were being developed were in zip codes 26 and 27 and 29. Unlike the townhouses, you can't just flip a switch and sell condos in 3.1 and 3.0. So what happened here, it was affected. It did recover quickly. But as far as when you're looking at the location, that's where the developments are. So if you look now, and we're going to do a special condo video where the new condos are being developed right now. If you ride down 127th Street, 128, and all the way up to Washington Heights, you will see some very large projects going up. What did happen in COVID is some of these larger projects, instead of launching all of their units, they literally started pulling them off and only selling 2 and 3 at a time instead of 25 at a time. So they control the market. It's easier to control a market in the condo when you own 200 units as a sponsor. So even though the condo market is back and it took a bigger dip quicker and returned, it was controlled by the sponsors that were releasing the units, and the area were controlled by where they were being developed because it's a 4-year process. So this, over time, you will see where they're buying the new lots to build the new condos. It's just a little different than the townhouses. Hope that made sense. Okay, we're going to talk about the market status and trajectory, where we are and where we think we're going. Double check with your advisors.
That's right. So the first 2 sections of this video have analyzed where the townhouse and condo markets have been. Now we pay especially close attention to market status, like where the market is. And this allows us to look at or to predict market trajectory. That is where the market's going to go. That's important. So we analyze the past and present to predict future trends. As Rob said, any prediction that we make is our best good faith estimate, and it's subject to market forces. Okay, let's start by looking at townhouse inventory and in-contract listings. So the number of townhouses that are on the market and the ones that are going into contract, because these are both measures of market status. So we've looked at sales. We can see the market's coming back in terms of sales. Now we're going to look at where the market's at now and where it's going to go. So following a market downturn, inventory is the first marker of a recovery, followed by sales. So supply comes back, and it's followed by demand. You can see here that following COVID, inventory began to return starting about August, peaked in November at 91 townhouses on the market. It's since dropped and has remained between 70 and 78 ever since.
Can I add something?
Yeah, sure.
So you're in a normal market, the fall market, the September through November 15th market, you do see a lot hit the market. And then the reduction here happened to be sales. A lot of them were sales, but a lot of people did pull theirs off the market to put them back on the market in the spring. So.
Sure. So supply peaked at 91, and demand follows supply. So this is listings, this is in contract. The number of houses in contract has also gone up. There's a lag, so the listings went up, the in contracts followed, and it's currently at 25, peaked at 26 last month.
And something to note on here is we have never, I've been doing this 30 years, I have never seen December to be a peak in contract listings. So this is the first year that everyone stayed home for COVID and people were buying real estate, and December was an absolute anomaly. Okay.
Townhouse inventory has been stable at 70 to 78 since December the 31st, but like a duck swimming on a pond, it looks very stable, but there's a lot going on underneath. 14 to 18% of listings turn over each and every month. And if you don't follow the market every month, you don't see it. So for example, in June, we saw 8 properties leave the market, 5 went into contract, 3 were delisted, and 14 joined the market as the recovery picked up pace. 12 were brand new listings and 2 were relisted. Again, we pay very close attention to the market, and this helps us to assist our clients.
And if you look at our monthly updates, I do the monthly updates. Gareth helps me with the data there, but this is what we go over, and this stuff gets in more detail as to what properties left the market, which ones were delisted.
Right.
We don't mention all of the property names, but we study them in depth every month.
Right. Okay, so we also break down the market by price, market sector, price, and property class, zip code, as you saw in parts 1 and 2 of this talk. If we look here, this is listings, in contract townhouses, and sales by price. Below 2 million, 2 to 3, 3 to 4, and over 4. So of the 78 listings on the market, left-hand graph, 34 are priced at between $2 and $3 million. That's almost half. You can see that here. Of the 25 in contract listings, 13, that's more than half, are priced in that bracket. You can see that right here. And then of the 35 sales, quarter 1 and quarter 2, 30, that's 6/7, are priced below $3 million, right here. This tells us that the lower end of the market is kind of dominant now, and that's what we'd expect following a situation such as we had last year.
It actually supported the market through the entire COVID. If you looked at all of our weekly and then monthly videos, above 4 million, forget about it. Above 3 million, how many sales?
4.
Four
five,
this year.
5,
and then
5.
If we looked at our videos from last year, you don't remember off the top of your head.
I don't,
yeah.
no.
But if you looked at our videos, everything was under 3 million during COVID.
Right.
So although the price per square foot and the average price of the townhouses sold were very similar to the last 4 years, the upper end of the market did not move.
Right. Okay. So townhouse discounts. So another marker of a down market is where kind of owners begin to offer discounts in price in order to facilitate sale. Since March 2020, when kind of COVID hit, listings started to offer discounts to encourage sale. This peaked in February 2021, right here, when almost 60% of discounts offered discounts which averaged about 11% of the price.
60% of the properties offered discounts of an average of 11%.
Absolutely, right. That's decreased since, as we get into kind of July the 1st this year. It's down now to 41%. So, so that suggests that the market has corrected. Fewer properties are now offering discounts. It's another marker of recovery.
Yeah, and we talked about it in the market update last month, where the discounts were stopping or going down, and now they're continuing. Right. So this slide should keep going.
Yep. Okay, so finally, let's look at condo inventory. This is actually my favorite slide in this entire talk. As mentioned, following a pandemic or recession, inventory is the first marker of our recovery. We saw that in the townhouse market. We see it in the condo market. But interestingly, like the townhouse market, condo listings recovered post-COVID, but they overshot, hitting 437 listings in October, which is the most ever, Rob, right?
Yep, that is.
Yes, it is. So that then decreased to 354 listings in February as sales came back and recovered. But by now, it's back up to 430 right here. So the inventory in the condo market is high, and sales are also high now. We've got increased sales and inventory. They suggest that combination suggests pent-up supply and demand. And that suggests that the condo market may really take off this summer. Okay, so to summarize market analysis sector of this talk, part 3. So inventory has recovered post-COVID. Demand is following supply. Sales are increasing. Analysis of the townhouse market shows that 14 to 18% of listings turn over each and every month. Townhouse in-contract listings are increasing. The condo market has recovered fully and appears poised to take off. As we say in every section here, of this talk, we analyze the past and present to predict future trends to optimize client outcomes.
Okay, so thank you again for joining us. Remember, we've been doing this for many, many years, decades. So this is our mid-year report. We do monthly updates, and we do quarterly reports like this. So our print version comes out when?
A few days. It'll be about 17 pages. 17
pages long. So if you didn't get enough here, you know, a little restroom reading, take that home with you, and you have 17 pages to read at home. But as far as all this stuff, concentrate on Facebook, coming soon, Harlem Lofts. That's where you're going to see the listings before anyone else sees them. And then YouTube. Subscribe, and click the little bell, I think you do, and you get a notification of exactly when these are launched, and you see them before everyone else. And do us a favor. My sons keep telling me, hit the like button. So, you know, hey, help us out a little bit. We put a lot of energy into this, and we truly hope it helps you make a decision on one of the biggest decisions you'll make in buying or selling your home.
Okay, so thank you from me. Thank you from Rob.
Thanks so much.
Okay, thank you.